How does the pivot, the pivot that everyone's been waiting for, affect bottoms-up investors and top-down investors differently?
I think it just turns things into a little bit more of a friendly investing environment, Scarlett. We knew it was going to come eventually, and now, it looks more clear that the Fed is becoming comfortable with the path that inflation has taken downward towards its target. And we're seeing investors, link their forecast to what the economists at the different Federal Reserve banks have put out there, and that's what that dot plot is. Now, we did see a little bit of walking back by Williams today, not allowing investors to get too far ahead of the Fed, because the Fed does not create a policy forecast with those dot plots. And so the Fed is not out there saying we are going to cut by 3 times next year, but they're saying, hey, look, if the economy goes the way we think it's going to go, then lower rates would be consistent with what we think the economy is going to do and our move towards that lower inflation target. And that's all very positive for equity investors. And, we had seen the valuation hit, right, that growth stocks took when rates went up. And now we're seeing the converse of that, the valuation expansion of growth stocks with the anticipation of lower rates, which we're seeing now in the 10-year.
So what does that mean for something like the Magnificent Seven and their valuations, the possibilities ahead now that we have finally gotten a pivot and rate decreases? I don't know why I keep saying rate increases. I'm so used to it, I guess. Rate decreases are likely in the pipeline in 2024.
Interestingly, the Magnificent Seven seem to ignore the fact that interest rates went up over the course of this year, right? And partly because many of those stocks had been really beaten up in 2022. And so if you look actually at a 2-year chart, I think 4 out of the 7 are indeed up on that basis, but 3 of them are still down. And I think it's AMD, Tesla, and Google. And so the rates really were not playing much of a role there. And I think partly because the growth story for many of those stocks was so compelling and was expected to persist. That growth was expected to persist for so long. That it overwhelmed the discounting effect of higher interest rates. So now, right, as we move towards lower interest rates eventually, we're going to see valuations get further boosted, we think, because of that valuation effect. So that's a positive for the Magnificent Seven, but obviously one should be careful. We don't expect the same sort of performance out of those stocks in coming years that we saw this year, which again, a lot of it was a compensation. Yeah. The amount those stocks went down in 2022.
JoAnne, when do we get the markets and the Federal Reserve in sync? Because the markets still aren't in sync with the Federal Reserve, even though the Fed kind of moved to meet the markets this week.
Never. I'm surprised Powell wasn't one of your big 3 people this year, because obviously that had a big impact on the markets, that signaling that, real rates are now pretty high. Monetary policy is in restrictive territory. And so therefore, past Federal Reserve policy is doing the job the Fed needs it to do. The market is always going to, try to predict a precise path for interest rates, whereas the Fed is going to say, look, it's still uncertain. We think that things are restrictive enough now. They're not saying they know, right, when things will move to a point where they can cut rates. Now, some of the economists that work for the different Feds have put that in their models. So the market is going to do a pinpoint estimate of when rates are going to fall, and the Fed is going to stay on the side of there's lots of moving parts. There are a lot of things that are uncertain. And so I think you're never going to have quite a match, and we're going to see this continued oscillation. But a good thing is that even as the Fed, Williams today tried to push back a little bit on the number of rate cuts that the market has built in, eventually, right, rates will be cut. And so the valuation impact that we care about for growth stocks is still going to be a supportive environment, because eventually we will get those rate cuts. We just don't know when.
If we start getting rate cuts, part of what you would deduce is that the economy is slowing. Would that be enough to stop this rally, or does this rally continue because of rate cuts?
Vani, it is going to depend, as you sort of hinted at, the reason why rates get cut. And that's been sort of the story of this year. Folks were saying, hey, if a recession comes along, then the Fed's going to cut rates, and only then. Now it seems the market is saying, well, guess what? Maybe we won't have a recession come along, and yet the Fed will still eventually cut rates because they will have achieved their inflation target. And so it really depends on why. And right now, I think the probability of a recession is much lower. We've gotten through the worst of restrictive monetary policy without triggering a recession. I think that's why the market is sort of celebrating.
So how are you celebrating, JoAnne? What kind of positions are you doubling down on or perhaps taking a second look at now because of the developments of this week?
We're long-term investors, Scarlett, as you know, and we're doing investing in individual stocks. Our goal in, say, a balanced strategy, for example, is still to deliver for clients a diversified collection of like 40 to 50 stocks. So the change that the markets saw in the Fed was something, we've sort of been expecting is eventually, right, the Fed's going to move towards easier monetary policy, but we don't expect that anytime soon. And so we sort of been positioned for that. For a long time. We continue to like a mixture in our balance strategy, for example, of growth-oriented stocks, companies like a Microsoft or a Broadcom, for example, and some higher dividend yielding stocks, which really boost the income for clients. They seem to like that. It helps them sleep at night. Whether that's a Philip Morris or a Chevron, which has had some issues, or an AbbVie in the healthcare space.